Hello, in this video, I want to show you how you can trade the candle range theory. The best way to trade the candle range theory, the most effective way, the most profitable way, high efficiency and high probability way of trading the candle range theory. The candle range theory is perhaps the hottest concept right now in the world of forex trading in the ICT trading industry. But I will show you the right way, the best way, the easiest way, the most effective way you can trade the candle range theory and make profits every day that you trade the market. Right. So now, what is the candle range theory? The candle range theory states that every candle is a range on a lower time frame, and every candle also has its own power of 3 on a lower time frame. I've made a previous video on the power of 3, and I've shown you how you can actually trade the power of 3, the most effective way you can trade the power of 3. But today I'm going to show you how you can trade the candle range theory in combination with the power of 3. All right, so now the best way to trade the candle range theory is to trade the candle range theory in combination with the daily power of 3 strategy and the previous day's high and low strategy. You cannot see this anywhere on the internet. But this is my way of helping you to become better at trading and to make more profit. That is why I'm bringing these concepts to you in a better way, all right, in a way that you would trade it better and make more profit, and the easiest way and the most effective way to benefit from the candle range theory. Now, I've made a previous video on the power of 3, but let me just do a little bit recap. I have attached the previous video I've made on the power of 3 in the description box of this video. Now, for the power of 3, the power of 3 actually has to do with accumulation, manipulation, and the distribution. That is the AMD or PO3, power of 3. So it actually means that when the market opens, the market mostly opens with the Asian session. This is the open, and when the market opens with the Asian session, there is some sort of consolidation, which is called the accumulation of orders. But at some point, after the orders have been accumulated, the market goes in this direction, which is manipulation, and the manipulation is a fake move. Manipulation is a fake move. Is a move intended to trap retail traders. So it's just a false move. The market goes in this direction, and when the market goes in this direction, the retail traders will go in this direction in order to thinking that this is a breakout. Thinking that is a breakout from the range, the market will go in this direction, thinking that the retail traders will think that is a breakout from the range. And when they have done this, they will place their stop loss right there, all right, at the other side of the range, and enter a sell trade right there, only for the market. This manipulation phase will happen during the London session, and when the market traders have entered a trade at this manipulation phase, then the market will now go in the opposite direction during the London session, and all stop losses right here will be raided. All right, so this is a manipulative move intended to trap retail traders and to stake out their stop losses in a distributive move, which is the distribution phase, which also happens in the London session or during the New York Open. All right, so you can as well see this right here. Okay, you can see it right here, and this AMD can happen in just one candle. Okay, mostly if this is a daily candle, you can see that this here market open, and when the market opens right there, this is the market open, which is actually the accumulative phase. All right, the market open, the accumulative phase, and when the accumulation has happened right there at the market open, and mostly at the Asian session, manipulation will happen, which will create the low of the day. All right, this is the low of the day. The manipulative phase will actually create the low of the day. So as you can see here, that the low of the day has been created, and then when the low of the day has been created right here in the manipulative move, the retail traders will place their stop loss right there, and then the distributive phase will happen during the New York session, during the London session actually, or the New York Open, and you have that the market will create a high right there. This is just one candle, create a high, and when a high has been created, the market will now close right there. All right, so this is the market open on one candle. This is the low of the day right there. This is the high of the day, and this is the close. This is for the buy scenario. For a sell scenario, just a similar one. For the sell scenario, you have is the market opens actually with the accumulation right there. It opens right there at the accumulation, and the market now goes up to create buy up to actually create the manipulative phase, and then the distribution. The markets will create the low of the day and now close right there. Okay, so this is for this one candle. You can actually see all of this phase. The AMD can happen on one candle. All right, and this is mostly the daily candle. All right, so it can happen on one candle, the AMD. So but we are going more deeper into the concept. Just stay with me. I'm going to show you how you can actually trade the candle range theory in synergy with the power of 3 and the previous day's high and low strategy. Now, 3 CRT patterns. There are more than this actually, but these are the most common CRT patterns on the daily time frame. All right, it can happen on the daily time frame, it can happen on the 4-hour time frame, it can happen on the any time frame basically, but it's more easier to trade when you are using the daily time frame. So I would advise all my mentees, please, you can use the daily time frame for your setups. For the CRT pattern, is more clearer and more easier to comprehend and also to trade. So the first one, you can have the CRT pattern on a 1 candle, on 2 candles, and on 3 candles. This is for the buy scenario, and these ones are for the sell scenario. All right, so but let me explain how this works. Now for the buy, this is a daily candle. The market opens with a consolidation. The market now, that consolidation, as you are aware, is the accumulative phase, and the market gives us the low of the day. And now you have that low of the day. The market goes down to give us the low of the day, which is actually the manipulation. And now you now have the distribution, and the market gives us the high of the day, and now you now have the consolidation, our market closure. So this is the AMD. All right, this is the low of the day. This is the market high. All right, and this is market closing. All right, this is for the buy phase. Now for the sell phase, the market opens with a consolidation, which is the accumulation. You have the market to now have a manipulative phase, giving us the high of the day, and the market will distribute. All right, distribute right there. This is the A, this is the M manipulation, and which is give us the high of the day, and now the market will create the low of the day and now close. All right, on 1 candle. Now for the 2 candle pattern, you see that here the low of the day was taken out. This is the accumulative phase right there. All right, or the candle range. All right, this is the accumulative phase. This low was taken out. All right, here on a lower time frame is clearer. All right, this is the candle range. Here, this is the candle range low, candle range low, candle range high. All right, on a lower time frame you see it clearer. All right, candle range low, high. So for here, for the double candle pattern, you see that this low was taken out by this bullish candle. All right, the low was taken out, and then you now have that is the manipulative phase. So there is the distributive, there is a accumulative phase on this red candle, and now the low was taken out right there, and then you now have the distributive phase right there. This is accumulation, manipulation. All right, the red candle gives us the accumulation. The manipulative phase actually is when this blue candle, all right, takes out the red candle. All right, and now in that same blue candle you now have the distribution. All right, and now giving us the high of the day, and then the market will now close on these 2 candles. For the sell scenario, you can see that the accumulation will happen on this blue candle, and now this red candle takes out this high, giving us, this is the accumulation. This red candle takes out the blue, giving us the manipulation. All right, takes out the high, giving us the manipulation. Retail traders are trapped, actually manipulated to take this trade on a buy, to take a buy trade right there, unknown to them that it is just a trap. And now there's going to be a distributive phase right there. All right, distributive phase right there. Okay, this one here is the AM, this is the D. All right, this is AMD. All right, on 2 candles. So you have something like this: accumulation, manipulation right there, and distribution. This is the high of the day. This is A. This is distribution. This is the manipulation right there. And now the market gives us the low of the day, and then closes right there. Right, this is for 2 candle pattern. Now for a 3 candle pattern, this is clearer. This theory, the CRT theory, is clearer on a 3 candle pattern. So this is the accumulative phase right there. The blue candle takes out this low, giving us the manipulation, and then the market here. This is A, M, D. So this first candle is the accumulation. The second candle, which is the blue candle, is the manipulation. This low is taken out, and then the distribution right there. High of the day created, and then the market closes. All right, so AMD is clearer on this 3 candle pattern, because the first candle is the accumulation, the second candle is the manipulation, and the third candle is the distribution. Here for the sell scenario, this is the accumulation, high taken out, manipulation, traders manipulated into taking a buy trade, retail traders manipulated into taking a buy trade, which is this manipulation, AM, and then the distribution. All right, here you can see this low taken out, retail traders deceived into entering a sell trade. This is my accumulation. They are deceived into taking a sell trade by this move, since this low was taken out, and now the distributive phase trades all their stop losses. Here, accumulation, retail traders, there's accumulation of orders, and the retail traders are manipulated into taking a buy trade on this manipulative move, and then there's a distribution which raise all their stop losses. The low of the day is created, and the market closes right there. So you can see that the AMD pattern can happen on the 1 candle pattern, the 2 candle pattern, or the 3 candle pattern. Mostly it can actually happen on more candles, all right, but it is clearer on these 3, and these are the most popular of the AMD pattern. So we'll now see on each of these candle pattern how we're going to go to the chart right now. You're going to see how this actually works. All right, I'll take you right now to the chart. You're going to see how this works right now. Now let's start with the 1 candle pattern. Okay, for a 1 candle pattern buy scenario, you can see here. Let us look at this candle, this 1 candle here that I've just marked. Now to make this clearer, I've activated the period separator. You can see this this dotted line. This dotted line separates 1 day from another. All right, on a lower time frame. All right, on a lower time frame, it separates 1 day from another. All right, so I've activated it. How to activate the period separator? You go to, on your MT4, you go to settings. Okay, you go to settings, then you check the period separator, the separator box. All right, just do that. So now let us look at this. This is a daily time frame. Let's look at this candle on a 15 minutes time frame. All right, on a 15 minutes time frame, you can see here that this is 1 day. This is the 6th of September. All right, this is the 6th of September. Okay, this is 1 day, this is another day, and this is another. That is why I have to activate the period separator, so it will be clearer. So if you are trading this strategy, please kindly activate this period separator. It will help you to know it better. So you can see here, this is the accumulation phase. The market started with the Asian session accumulation range. All right, A. Now you can see this candle right there takes out this low in a manipulative move. All right, giving us the low of the day, and now there is a distributive phase right there. The market raised out, there's a distributive phase. This break of structure happens right there, or shift in market structure, and this here, this is a FVG. The market actually used the FVG as a springboard to now buy up. All right, there was a break of structure and return to the FVG. There's a return to the fair value gap right there before the buy. All right, you can see clearly right now. So you have the A, the M, and the D on 1 candle. Remember, this is on a daily candle. This was on a daily candle. We saw this pattern. We had to go down. We stepped down to 15 minutes time frame. You can as well step down to 30 minutes time frame or 5 minutes time frame, but I prefer the 15 minutes time frame. It's clearer, it's more clearer and more articulative on the 15 minutes time frame. 15 minutes time frame. So you can see the AMD pattern on 1 candle, the 1 daily candle. All right, so this is the This is the previous day, this is the previous day, and this is the current day. So on the previous day, you can see this pattern now happens on the current day. So now let us look at let us look at the sell scenario. All right, for the sell scenario, we want to look at this. Let's see this candle. Let's see this sell candle right there, this one. So let us see, this is daily candle. Let's look at it on the 15 minutes time frame. So this candle, this one, we have to shade it in order to be able to note it when we step down to the 15 minutes time frame. All right, on the 15 minutes time frame, you can see this candle. You can see that the market opens with a range. All right, the Asian session opens with a range, and you now have, this is the accumulative phase. You can see how this wrong move, there's a breakout from the range. Actually, the manipulative phase is characterized by a breakout from the range. All right, this is the manipulative move, a breakout from the range. But should a breakout from the range happen, the distributive phase always happen in opposite to the manipulative move. All right, because the manipulative move is a force move intended to trap retail traders to take the wrong position, and the distributive phase is intended to now raid the stop losses that was created by the manipulative move. You can see now that the market now sell down the distributive move, and once it sells down, there's a break of structure right there, or shift in market structure right there, and there's a return to FVG, return to the fair value gap or order block, as the case might be, and there's a sell down right there. All right, this one, there's a return to FVG here. There's a return to FVG, fair value gap, and you can see how the market sold down there. So this is the 15 minutes time frame on the 6th of September. All right, on the 6th of September, the daily candle, how this happens on the daily candle, on the actually on the 15 minutes time frame. The setup, the entry was on the 15 minutes time frame, and the daily candle was the setup. All right, so now let's see. Now let us now look at the two candle formation. The two candle formation here on the daily time frame. These are the two candles we want to look at. All right, so you can see I showed you this pattern. This is the red candle, and I also showed you that there's a now a bullish candle right there. This is the pattern. So this bullish candle rates the low, raise the low of the red candle. So you can see this is what we are looking at right now. This is the daily candle. Let us shake the lower time frame, 15 minutes time frame, to see how the CRT, Candle Range Theory, and the power of 3, the PO3 happens right there. So let us see. Okay, before we do that, we have to shade these two candles in order to be able to see it clearly on the 15 minutes time frame or the lower time frame. So we go down. So you can see this happens on a course of 2 days, because if you can remember, each candle on the daily candle daily time frame represents 2 days. All right, so we can see now this is day 1, this is day 1, and this is day 2. So each candle represents a day on a daily time frame. So now we step down to 15 minutes time frame. You see that day 1 was characterized by a range. All right, day 1 was characterized by a range. You see, this is the range, this is the accumulative phase, and in day 2 the range was raided by the manipulative move. All right, by that second candle, the daily candle, the second day candle. All right, the current day raids, day 2 raids the day 1 candle. All right, day 2 raids that candle, it raids the previous day's candle. All right, it raids the candle and giving us the low of the day right there, the low of the day. And now there's a break of structure right there, or the shift in market structure, or the break of structure, as the case might be, given all this change of character. And now there is a return to FVG right there, return to FVG, and now there is, or return to order block, and now there is a buy on, giving us the distributive phase. All right, you can see this is AMD formation on a 2 candle pattern on a lower time frame. AMD formation. All right, accumulation, manipulation, and distribution on a 2 candle pattern. All right, 2 candles pattern on a daily time frame, and we can see it clearly on a 15 minutes time frame. All right, let us look at the sell scenario. You can see now these are 2 candles are just marked in order to make it clear. So I've showed you, I told you when I was explaining to this is the second candle, two day or two candle pattern of the AMD or the CRT. All right, so here this second candle raised the high here, raised the candle range high. All right, given which actually is the manipulative move to trap retail traders into a buy trades, not knowing that it was intended to sell and to raise their stop loss. Let us see it clearly on a lower time frame. All right, but before we go to lower time frame, we have to shade in order to be able to know this. This is actually, I think, on the 22nd of March. Now we now step down. Okay, 20th to 21st of March. Okay, you can step down. So this is the accumulative phase on day one. And now there is a raid. There's a raid right there. All right, there's a raid. There's a manipulation right there, because the top of the candle range high of day one was raided, and after that raid, there's a change in market structure. All right, or there is actually a change of character right there on day two, and a return to order block of FVG, and now there's a sell. There's actually a sell right there. All right, there is a sell off. There's a sell off right there. You can see this sell off right, how that the market sold down there. So this happened, this AMD happened 2 days, within the space of two days. All right, it's happened within a space of 2 days. So this is actually for a sell scenario of the AMD or the CRT pattern, 2 day CRT pattern. This is a 2 day CRT pattern for the previous day and the current day. So that's why I'm telling you that one of the best ways to trade this CRT pattern is in combination, to trade it in combination, as I said, with the AMD pattern, the power of three pattern, and the previous day's pattern theory. Now let us now move to the 3 candle pattern. All right, the 3 candle pattern. This is a clear example of the 3 candle pattern. And it is simplest. All right, this is the AMD. All right, the first candle is the accumulative phase on the first day. This happens over the course of 3 days. The first day is symbolic of the day one, as I said, is the accumulative phase. Day two is the manipulative phase, and day 3 is the distributive phase. So let us see. We have marked it here, as I can show you. Right, this is the first. This is a 3 candle, 3 days. This is a daily time frame. So let us now go into the 15 minutes time frame. But I see how this is the low, this is the high of this first candle. This was rated, the low was rated into a manipulative phase, before you now have the buy or the distributive phase. This is the manipulation, this is accumulation, manipulation, and the distribution. All right, so we shade it as usual in order to see it clearly on a lower time frame. And you can see on a lower time frame, this is day one. As I told you, I activated the period separator in order to be able to identify each day. All right, in order to identify each day. So this is day 1, this is day 2, and this is day 3. All right, so now this day 1 was characterized by a range, which is the accumulation. All right, day 2 was characterized by a manipulative move. The low of the previous day was raided by this move, and this is a manipulative move intended to trap retail traders into taking a sell. And now you can see that there was actually a change of character right there, or shift in market structure, a return to order block, and there was a buy. Okay, there was a buy right there. So for a sell scenario, these are 3 candles that will help us that will show us this. Okay, this is the first candle, and now this is the distributive candle right there. So let us show you. You see, I've marked it here just to make it clearer for you. And now this is, you now have to shade as I do in order to make it clearer to you to identify in a lower time frame. So now on a lower time frame, you can see this is the A, and this is the M, and this is the D. Day 1, day 2, and day 3. Okay, so day 1 characterized by a range or a accumulative phase, and now the high of the day was raided into by a manipulative move, and now that manipulative move happened on day 2. All right, this is manipulative, this is AM, and now on day 3 we have the market return to order block, this order block right there, before a very strong sell happened. This, you can see this very strong sell, very strong move, a very strong distributive move here happened over the course of 3 days. You can see the AMD played out, but this was actually clearer when you combine the PO3 plus the previous day's high and low theory. I've made previous videos on the previous day's high and low theory strategy, and I've also made previous video on the power of 3. I've made two previous videos on the power of 3. The first one was on daily power of 3. I've also made a second video on the weekly power of 3. I'll put three videos on the description box of this video. All right, please kindly view those videos. They will help you to expand your knowledge on this principle. All right, so you can see how these are beautiful setups. I want to show you some beautiful setups of the AMD. All right, the beautiful setups on the AMD. This is the accumulation here, manipulation, okay, shift in market structure, all right, return to FVG, and the distribution. All right, so you can see it here, accumulation, manipulation, and distribution. These are beautiful setups I just want to show you. That was for a buy scenario. Here as well for a buy scenario. You can see this one as well. You can see this lovely setup, all right, that played out. These are previous setups that have played out in time past. All right, so this is also accumulation. This is accumulation, manipulation, and distribution. You can see another one here as well. These are beautiful setups that have played out in time past. Beautiful setups. You can see how there's an accumulation AMD setup, accumulation, all right, manipulation. There's a shift in market structure, return to FVG, and a buy. As you can see it clearly here. Okay, this is another setup. This is for a sell scenario. For a sell scenario, you can see how that is accumulation phase right there. All right, manipulative move, change in character, change of character, return to FVG or order block, and now a sell-off. All right, so you can see the pattern right there. Okay, there's another one here. This is another one. I just want to show you different occurrences. This can happen on any time frame. The CRT pattern can happen on any time frame. All right, you can see this one, this beautiful setup as well. This is another one here as well. Okay, this is another one. This is another one. Okay, here you can see the accumulation, manipulation, distribution. There was a return to FVG right there here, FVG, or even order block here. You can see how that the market sold down right there. This one as well. You can see this one as well. These are beautiful setups I got in order to show you how this works. All right, how this works. Take your time, view this video again. Go through this video again, view this video. It will make more sense to you. If you want me to take you by the hand until you become a very profitable forex trader, I'll take you by the hand, train you, mentor you, help you to destroy or to remove your deficiencies, help you to eliminate your deficiencies, and help you guide you towards profitability. I'll demystify these concepts to you and help you to become a profitable trader. Do send me a message on Telegram. My contact detail is in our free Telegram channel. The link to the free Telegram channel is in the description box of this video. All right, do contact me and I'll help you to become a profitable trader. I'll take you one-on-one. I have several people I'm training. I'm mentoring one-on-one. It just doesn't cost you much, just an investment that will help you to pay you far better in the nearest future. It's an investment for your better trading career or your life. So if you as well have not joined our free Telegram channel, kindly do so. The link is in the description box, of this video. Please, if you find this video useful, kindly give this video a thumbs up. All right, share this video with your friends. If you are not yet to subscribe to this YouTube channel, please kindly subscribe to this YouTube channel. You see how I've helped you to understand this concept clearly. You can reciprocate by also subscribing, sharing our videos, giving this video a thumbs up. If you as well need me to make any particular video for you, help to demystify any concept, kindly let me know the topic you want me to create on my next video on the comment section of this YouTube channel, on this video actually. So till I come your way next time with another useful content, do have a wonderful day ahead. Bye.